Yesterday, I spoke with both Senator Schumer and Manchin and offered my support for a historic agreement to fight inflation and lower costs for American families. It's called the Inflation Reduction Act of 2022. Some of you will see a lot of similarities between the beginning of the Build Back Better initiative. It's not all of it, but we've moved a long way. This bill requires the largest corporations to begin to pay toward their fair share in taxes by putting in place a 15% corporate minimum tax. Now, I know you've never heard me say this before. It will come as a shock to you, but 55 of the Fortune 500 companies paid no federal income tax in 2020. I know you only heard me say that about 10,000 times, but the fact is they paid no taxes on an income, collective income over $40 billion. Well, guess what? This bill ends that. They're going to have to pay a minimum of 15% tax on that $40 billion or whatever the number turns out to be. Fifth, this package will reduce the federal deficit by over $300 billion. Already on my watch, deficits come down my first year by $350 billion and a record $1.7 trillion at the end of this fiscal year. Now, this bill is going to keep that progress going. Yes, I'll say it again. This legislation will bring down the deficit. Bring down the deficit. The sixth point I want to make is this bill will not raise taxes on anyone making less than $400,000 a year. And I promise, a promise I made during the campaign and one that I've kept. Now look.
David's question by asking you specifically, do you think it will be necessary for unemployment to rise above 5% in order for inflation to reach the Fed's longer-run target of 2%? Thank you.
Well, I believe, as I've said, that there is a path to bring down inflation while maintaining a strong labor market. And most estimates of the natural rate of unemployment are lower than 5%. Now, it's not a certainty that can be done, but I believe there is a path to accomplishing that. And as Chair Powell has said repeatedly, that would be his objective, to try to accomplish that. And I would consider that a good outcome as well. Clearly, we are seeing a slowing in the economy and in demand that's appropriate and necessary to transition from rapid growth and recovery from a serious job shortfall to now a very strong labor market. We need to see a slowdown in growth. We are seeing that. I do believe there's a path by which we maintain a strong labor market like that.
Welcome to the Cryptoteacher. And guys, I come back with that video just to make you think. And we have Biden introduces the Inflation Reduction Act. They think that all of us are asleep. Like Biden said, this is similar to the Build Back Better Act. Guys, we know this is Schmeat's a year. They're going to be moving us over to this clean energy. This is an energy bill. This has nothing to do with inflation. What's going to bring down inflation is what, guys? These layoffs. When they take humanity out the workforce in order to bring in the robots, algorithms, and drones to replace humanity while the sheep go inside the metaverse. This is all this bill is about. You're going to tax the corporations 15%, which we know they're going to pass on to the American people, which already don't have any money because of inflation. Then on top of it, you're going to close the loopholes. And we know corporations should be paying taxes. We know they shouldn't have any loopholes. But guys, that's not the way the system is set up. It's always trickle down. It's not trickle up. And this was set up a long time ago when Reagan was in office. That's the reason why these CEOs make all this money. But guys, it's going to be pain inside of America and across this globe. 2023 and 2024, the corporations are going to be cutting back. Janet Yellen was asked, how can inflation come down without hurting the jobs market. It's impossible because the only tool that the Fed has is raising rates. And we know if you're raising rates, you're going to shrink liquidity. You're going to make it more expensive for these corporations to gain the money. Then on top of it, you're giving them a 15% tax. And then on top of it, you're closing the loopholes, which they know the end result is called layoffs. And right now, the dollar is strong, hurting the emerging markets. But also, commodities are looking great. But who is that helping? That's right, Russia. This is all a planned event to destroy the American dollar because these emerging markets are going to have to get off the dollar and go to the new reserve currency and the new power. And that is China, the dragon with that digital yuan. And remember, the crypto teacher told you. Now we have FTX is pushing tokenization of stocks. Guys, we know it's coming. Everything's going to be tokenized and put on blockchain. And we know Paxos already is working on that real-time settlement. Yes, there's a lot of moving pieces. But you know, with the crypto teacher, I keep you focused. Guys, it's all about building the fourth industrial revolution. Yes, you're going to have a lot of distractions. And we know that main event is coming up in the fourth quarter. So the NWO can build this fourth industrial revolution. We saw clean energy stock spike today. Guys, this act has nothing to do with inflation. It's all about the robots, algorithms, and drones and the sheep going inside the metaverse. And remember, the crypto teacher told you because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
It's been a significant appreciation of the dollar. I think part of it is driven by interest rate differentials between the United States and other countries as we've moved to tighten monetary policy more quickly. It's attracted capital inflows into the United States that have pushed up the dollar, and that's typically something that occurs in cycles of monetary policy tightening. I think we've also seen some risk-off, safe haven type flows into the dollar that have exacerbated that. I am worried about the global outlook. The IMF and World Bank have, on several occasions now, downgraded the outlook. A strong dollar creates, for some of those countries, pressures on their economies, especially when there's dollar-denominated debt that becomes harder to pay off. So a rising interest rate, strong dollar environment can create pressures in other parts of the world, especially at a time when all of us are suffering from the impacts of Putin's war that are driving up energy and food prices and creating real burdens on most countries around the world, and particularly the lowest income countries. We are seeing more countries that are likely to experience debt distress. So this is a stressful environment for many countries around the world. Some countries are benefiting from higher commodity prices, though, so it's an offset and it differs.
So the other piece of this is the payment for order flow component, which is that you don't have it. So the question is, you don't have it, that you're not using that as the method to get paid. How are you getting paid?
So right now it's free for all users. Starting in a month, it's going to continue to be free for all purchases under 1 share. One thing we learned from our private beta is a surprising amount of flow results from fractional share buys, ones that are underneath 1 share. High price stocks like Tesla, people buying, 1.2 or 1 share. But then from there, we're going to be charging a commission on each trade, which is sort of like going back to how things were, in the old days. But for us, we think that that's going to result in a much more transparent and fair and honest pricing while we continue to route these orders to public exchanges rather than having to rely on, private dealers, individual wholesalers, where on unregistered ATSs, shares are being filled off of the exchange.
What's the commission rate?
We're going to be charging 5 basis points per trade. but then we're going to have a 2 basis point tier as well for those who are trading a fair amount. So it's going to be a pretty small fee, especially if we compare it to, on the crypto side. But our users, especially on the crypto side, are used to this kind of very simple and honest and fair idea of just charging a flat percentage of the trade notional value on each trade, rather than having to think about whether the payment for order flow is deteriorating the quality of the MBBO, right, and people are truly getting honest pricing.
Can you do that profitably, or is effectively the fees on the crypto side subsidizing the trading on the stock side?
It would be profitable on its own, but it's not, of course, not going to be as high margin of business as our crypto side. One of the value props of us even bringing equities to the platform is the idea that we can bring more customers to our entire product. To have one holistic investing product for crypto and for stocks. Of course, crypto being the main business that we've gotten into, and truly the area for higher margins when it comes to fees.
Last time we talked, there was a lot of speculation, I believe, around your founder's decision to buy a stake in Robinhood, which you now compete against. And then there was speculation that you guys were going to try to buy the entire company. You shot that down. Speak to what's going on there.
Yeah, sure. So it's true that this platform absolutely just compete, directly with Robinhood, and in particular with Robinhood's model, which does rely on, wholesalers for all of its flow, and doesn't charge fees in the way that we do. And what it means is that, we're going to be building out this platform kind of regardless of whatever happens in the future with Robinhood. And for now, we're sticking at that. We have our own platform. Right. We recently made a big acquisition, which is of our clearing firm, Embed. And so now we're going to be able to self-clear in stocks and options. It gives us all of the capabilities and the licenses that Robinhood has. And so we'll have to see where that heads in the future based on the success of this business.
So when you said you got to see where that heads in the future, what do you mean by that? I mean, do you think there's still a chance that the company would want to buy, or he would want to buy the entirety of Robinhood?
It's not something that we're in active discussions about now, but we'll have to see where both the market heads in terms of let's say the stock price of Robinhood, but also in terms of how much we want to continue to deepen this business and think about customer acquisition. We're looking at a number of different targets across the landscape, from brokerages, crypto firms. At this current time, where private equity and public equity prices are down, there might be opportunities for consolidation. There was recently a discussed possible negotiation with different exchange about consolidation on the international side. So these are all things that we're looking at all the time and evaluating multiple kinds of deals, and Robinhood is just one of them.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.